Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, overnight the Australian dollar was all guns of momentum as it pushed towards the 73-cent handle after posting a high of 73.01 before declining. At the same time, the greenback was firming up as the FOMC went into session. As widely expected, the Federal Reserve kept interest rates unchanged at 2.25%, but at present has left the door open for a move in interest rates in December of a 25 basis point rise. From a technical point, the Australian dollar still appears exhausted as it attempts to take the challenge higher. Therefore, I do expect to see a little momentum towards 73 cents and could actually see a drop back towards 72.25 with the key levels of the 60-day moving average roughly around 71.85 to also this broad downtrend. Now, a close under these levels would reinstate the bearish case and look back towards the recent lows that was rejected at 70.20. But we do need to see these technical indicators also reversing, and at this stage a little to support this view as of present, but a move under 71.90 would get the momentum more encouraging to see the decline. Looking at the euro dollar, further gains were seen post FOMC decision, but the statement soon reversed all this, with the greenback strength coming back into play. Is the fact that the market is still looking for a rate hike in December, therefore has slightly strengthened the US dollar after its recent tumble. In the statement, the committee noted that the unemployment rate had declined since September meeting, and the Labour Department also reported last week that the headline jobless level was at 3.7%, the lowest level since December 1969. However, the statement noted that the growth of business fixed investment has moderated from its rapid pace earlier in the year. The dollar index overnight, which measures the greenback strength to the euro of 57.6, rebounded from 95.87 to a high of 96.56 and closed there in New York. From a technical point, I feel the market will be testing lower and look towards this August hammer that was posted at 112.95. Now, a break beneath there would give further scope to 111.60 as a potential target. With the resistance taken out now in dollar yen at 113.65, little view do I hold, and therefore I'm in neutral land until we get some kind of turnaround or firmer direction. But nevertheless, there is still a little bit more room for today to test 114.20 before turning back towards 113.65 to 112.85. Interesting to see that the pound is finally broken down after the recent rejection from 131.70. Since the peak is little Brexit updates, but there is some stories out there stating that there could or may not be a deal on the table, which has given the pound a little bit of a wobbly case to the downside. With a target for moving, for my bias is moving from neutral to bearish, could see further weakness given that the RSI is breaking down and there's no trend anymore. And the fact is that we could be looking at 129.30 as a target, with a resistance intraday at 131 figure 15. The outlook for gold is breaking down further. Now, I am still a buyer or bullish from the region of the base of 1,212, with immediate support seen at 16. Like we've seen on the upside stabs, we could see the similar situation, and therefore see a rejection from this region and look back to the top side around 1,236 to 38. And rounding up with oil, the market has taken out that level of 61.40 and still poses a slight threat to the downside as a little rebound has been evident since this morning. If I am trading from a long side, then my stop is under 60.30 because beneath there could see the market challenge this broad trend from the weeklies at $58 a barrel. But while remaining above 60.30, then I'm in full view that we will see a rebound back to $64 a barrel and reassess from there. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report and I hope you enjoy the rest of the day and the great start to the new weekend.